Hello, good afternoon, and welcome to HYCM's online trading with myself, Giles Coughlin. I'm looking forward to taking you through the next hour as we're going to be looking at the market and seeing any opportunities that we have for today, as well as some potential opportunities we have for the rest of the week. So just as folks are coming in, I'm just going to say hello. If someone could just type in the question panel or comment panel to let me know that you can hear me okay, that would be great. It's always nice to know that I can be heard. Hi, Emily. Hi again, Sammy, Rajat, Hashlik, Idrisu. Good to have you guys on board. Oh, thanks, Emily. That's good. I always feel a little bit more relaxed when I know I can be heard rather than risking just talking to myself. Okay, as folks are just coming into the webinar, I'll just spend a moment looking at this disclaimer, just to make it clear that the whole purpose of this 1 hour trading workshop is really to begin to show you the skills that I use every day as a professional trader in order to identify high probability trading opportunities. Now, what I'm going to do through this hour is try to show you a little bit of behind the scenes thinking so that you can begin to recreate and replicate this process for yourself. There's a handout that goes along with this webinar, which you can find in the handout panel. We'll talk a little bit about that in a few moments. But just to make it clear that this is not trading advice, that's what this disclaimer says here. And the reason that's important is because trading is very fluid. New data, new information can come out, and it can change. What seems sensible, at 9 o'clock in the morning, can seem ridiculous with just 1 hour later, and even less on some occasions. So just to be aware that the whole idea, and think about this not as a signal trading service, but instead as how do I look at the market, how do I identify high trading opportunities for myself so that I can see them as they come along in real time. And the whole idea is today, you kind of look over my shoulder, you see my thinking process, we can have some interaction, and we can begin to make some trading assessments of the current market conditions. So we'll just look on to the outline of the session ahead. At the end of the session, I've got a special topic, and that special topic is a daily technical process for intraday trading. Now, many of you guys who've been following me for some time know that I spend a lot of time looking at the fundamentals, looking for potential good fundamental trades coming up. So I just wanted to spend a little bit of time today looking at some technicals, a technical process of how to go about once you've identified the currency pair you want to trade, once you've put your fundamentals into practice. I just want to go over again the technical process for intraday trading, because it's not actually very complicated at all. That's the beauty of technicals. They don't have to be incredibly complicated. They can be really quite simple. So we'll just go over a very simple process that you can replicate and you can use in your own trading. The handout for session. Now, the handout for the session you can find in the go-to webinar control panel. There is a section that says handouts, 1 of 5. And if you double click that handout and you put that there, that is the handout. Now, as I've said to a number of you guys before, I've tried to put some helpful guidance on just one page of A4. So the idea is you can print this out and you can put it by the side of your computer screen. And I've identified the trading into 5 key areas. You're looking back, looking forward, looking at the charts, looking at your risk, and then looking at the outcome of your trade. That kind of process is one that I follow intuitively now. But when you're starting to, look at these things, please do look at the sheet so that you can follow it in a logical way. Particularly when you're starting out, you want to follow the same process so that you're not forgetting key aspects. Particularly things like looking forward, looking for key upcoming market events. You need to make sure that you don't just stumble into trades at the wrong time. And with a little bit of practice, you will be able to make that second nature. Okay, I think, yeah, hi Nadir, good to have you. There's a few other people just coming in. Oh, that's great. Okay, if you're just joining us now, you haven't missed very much. We've just gone through the opening handouts thing not to miss, and that's on the handout control panel on the right hand side. You can pick that up. Okay, any suggestions for topics, please email me here, giles.cochran@hycm.com. If there's something in particular you want covered, email me there, and I can look at covering that in future sessions. So without further ado, please turn to your handout, and your handout will look like this, and I'm going to keep that up on board for us as we look at the session ahead. Now, the first thing to do is to look back. Now, I just want to spend a moment looking at this first little section here on looking back. See if I've got the sheet here. Yeah, here it is. I want to just drag this across for a minute. I want to make it slightly bigger. Okay. Now, the way I want you to think about this is when we're looking back, what you want to try to do is imagine in your mind's eye that you had to place a bet on two people fighting, okay? Now, if you had to place a bet, you may not be a betting person. I'm not a betting person, but imagine you had to do it just for the sake of argument. Now, imagine that one of those fighters was very strong and he was about to fight someone very weak. Well, in that case, it would be easy. You would place your bet on the very strong fighter rather than the very weak fighter, okay? And that's really what we're trying to do in trading. We're trying to find a strong man, as it were, who fights against a weak man, except that we're not looking at fighting men, we're looking at different currencies. So we're trying to find a strong currency, and we're trying to trade that against a weak currency, because they should be heading in opposite directions. We want to trade the weak against the strong. So when we're looking back, what we're trying to find, this is the whole purpose of this. As we look back, we want to see which currency is either particularly weak or particularly strong at the moment. What's the reasons for it? And that's the whole purpose of looking back, okay? When you think of it like that, you're trying to be, as it were, almost like a detective. You're trying to investigate and you're trying to make sense of recent market moves, and you want to pair up a fundamental reason with an equal reaction on the price chart, okay? So what we're looking for is a definite reason for a strong or a weak currency. As we put them together, we begin to develop our trading opportunities. So let's look back, and we're going to start now. It says, identify recent sentiment by reading up on the last two sessions of market activity. As I've said a number of times, sentiment is simply the mood of the market. That's all you're looking for. You're just looking what the recent mood is. So we're going to do that now, and we're going to look back on the last 2 or 3 sessions of market activity, and we're going to try to identify the key drivers in the market at the moment. Now, in the US session, yesterday, we saw a continued rally in the Australian dollar and the New Zealand dollar, and this was on the back of generally positive Chinese data. Now, this was a key data point to look at. This is China's GDP data for the second quarter. It was expected to come in at 6.2%, and it did come in at 6.2%. Now, the headline figure wasn't fantastic, but it was as expected. Now, this 6.2% GDP figure is approximately the weakest reading since the 1990s for the Chinese government. So it's not a great number, but it was an expected number, so it's not a surprise number. But the reason there was a rally in the Australian dollar and the New Zealand dollar, again, is because about 30% of Australia's GDP is made up through trade with China. So the good Chinese news was this: the retail sales were up and the industrial production figures were up, and both of them had good, strong beats. So that was seen as very positive, because the poor data was expected, so that wasn't a surprise, but the good data wasn't expected. And obviously industrial production when the world is concerned about the factories and the industry coming out of China shrinking, to see that growing is seen as a reassuring fact. So that's why we saw some strong strength in the Australian dollar and the New Zealand dollar pair yesterday. And yesterday I was looking to trade the Australian dollar against the pound. We'll get on to some of the weaknesses for the pound recently. Now that sort of has faded now, that sentiment, but it was quite a good sentiment yesterday. We also had Donald Trump yesterday saying that if you look at the bottom tweet here, Trump was tweeting away and he said China's second quarter growth is the slowest it has been in more than 27 years. The United States tariffs having a major effect on companies wanting to relieve China for non-tariff countries. Thousands of companies are leaving. This is why China wants to make a deal. So Donald Trump, remember, he's just come back from a conference in Japan, and he's been meeting with Japanese President Xi. They met about 2 weeks ago, and there's a kind of an uneasy trade truce. Okay, there's a kind of uneasy trade truce that's going on at the moment between the US and China. And so Donald Trump tweeting this tweet out yesterday is just showing you that although there's a kind of a ceasefire, there isn't really a truce. And kind of at any time we could have a flare up again between the US and China. So that's something we have to be aware of for trading risk assets. There is a definite potential for risk assets to be bought if the US-China trade war looks like reigniting. And of course, the risk assets, some of you regulars, could you tell me if we see a flare up again in the US-China trade war, what currencies would we expect to see being bought? We'll cover it later if you don't give me an answer now in the questions. I wonder, is there anyone here who'd like to just remind us what those strong currencies are in a risk-off environment? Okay, EFAM. Yeah, thanks, Aaron. That's spot on. The currencies that appreciate in a risk-off environment, as the Japanese yen, the Swiss franc, and the US dollar sometimes works as a safe haven currency as well. That's spot on, perfect, Aaron. Now, and EFAM, well done. In a risk-off environment, we see the Australian dollar and the New Zealand dollar depreciate. So those 5 currencies, well done to you both. Gold stars to both of you. We'll cover it again as a reminder for the rest of the groups, but that was a good one for the regulars. Just want to check your understanding there. Super. Okay, US session. We have Boris Johnson, who at the end of the Asian session, going into the morning session yesterday, he was saying that if Boris Johnson becomes the UK Prime Minister, he will seek a US trade deal as his first move as Prime Minister. Oh yeah, well done, Sammy. You got it as well. Tribuvan, Nadir, yeah, good stuff, guys. I've just seen your questions being answered. Hey, that's good. There's loads of people answering there. So well done to Sammy, Tribuvan, Nadir, Aaron, Ifam. Excellent. Yeah, so interesting scenario here, Boris Johnson. It's just worth taking a moment here. The pound is being sold off quite heavily at the moment, and it has been for a number of weeks. And the reason for this is that Boris Johnson, if he becomes Prime Minister, it's becoming increasingly apparent that he is much more likely to lead Britain into a no-deal Brexit with the European Union. Now, if you cast your mind back to Theresa May a few months ago, and you remember that many times she went to the European Union, she met with Juncker, she was meeting with Michel Barnier, the chief Brexit negotiator, trying to arrange a deal, and she was very patient and she worked very hard. Now, Boris Johnson is an entirely different character. He's much more straightforward in the sense that he's less likely to get caught up in all the detail, and he's much more likely to make a decisive move. Whether it's good or bad or not, I'm not saying. I'm just saying that is his temperament. So Boris Johnson has already said in a decisive way that we will definitely be leaving Europe by the 31st of October, with or without a deal. So Boris Johnson has made it clear that's the case, and I've also read some reports that the initial negotiations that have been taking place between Boris Johnson's potential new government and the EU have been entirely different tone to the way they had been up to this point. So they've been much more combative, much more sort of angry. So the chances of Britain and Europe arranging a deal is becoming less and less and less. That's part of the reason for the pound sell-off. Okay, we'll get onto that later, but near to medium term, we're seeing constantly pressure to sell the pound, and this is the reason as we're moving towards this 31st of October definite exit, which Boris Johnson has said if he is UK Prime Minister. Now, he's running in conjunction with another minister called Jeremy Hunt. And Boris Johnson is the favourite, but he hasn't been made the Prime Minister yet. So just to be aware of that and of that dynamic. And Jeremy Hunt is probably slightly softer than Boris Johnson in his approach. So Boris Johnson is probably the hardest approach. Okay, US session. There was some strong moves in Bitcoin that's just worth mentioning. Bitcoin was selling off from last Friday to sort of $10,000 support level. And there were some weekend reports that are worth being aware of for anyone who's trading Bitcoin on some US proposals to prevent big tech companies from functioning as financial institutions or issuing digital currencies. So there was an attempt by the US government to draft some legislation, Keep Big Tech Out of Finance Act. And if you just look at the Bitcoin chart, you can see here that this $10,000 area has held as support on the previous test in early July, late June. So that $10,000 level is being tested again now. So just to be aware that Bitcoin is at a very key level. Obviously stay above this $10,000 level, and technically we're looking to retest those highs, get below, and it's back down to this pivot point and to the 8,000 level, and the 200 moving exponential moving average down below. So there is some good support down below, just to be aware of that, and that fundamental mover for Bitcoin as well. Okay, now we're getting into the overnight Asian session. Now, there was one data point that I was following carefully for last night, and that was the New Zealand CPI data. Now, the CPI data comes in very infrequently. So when it does come in, the market pays a lot of attention to it. And the New Zealand US dollar traded higher after the CPI data for the second quarter came in line with consensus estimates. So the expected reading was 0.6%, and the quarterly 2 reading was 0.6%. Excellent. So year on year, the RBNZ's inflation data. Now you've got to remember the RBNZ's data, they use a different inflation data to the CPI data that was released earlier. And the one that the Fed prefers, not the Fed, the Reserve Bank of New Zealand prefers, was released at 3 a.m. GMT, and that came in unchanged at 1.7%. So inflation levels are quite good for New Zealand. It's sort of just above the 1 to 3% range that the RBNZ want to have. So that was quite a firm reading for the New Zealand economy, and as a result, we saw some strength in the New Zealand dollar. Now, the question that folks are wanting to ask is, what's the New Zealand government going to do at the next rate meeting? Are they going to stay on hold, or are they going to cut? So this doesn't give much clues out, but it's certainly saying that the New Zealand economy is holding firm and is certainly not contracting. So that means that those voices for a sooner rate cut will just be a little bit quieter after that reading. Now, let's look into the London session that's coming up. Now, one of the key London session data points was the UK labour data. Now, UK labour data, we had average weekly earnings coming in at plus 3.4% versus 3.1% on a 3-month versus 3-month expectation. Now, this was a very good data point out for the UK. These average weekly earnings tend to be a leading indicator for inflationary pressure. If people are paying and earning more, then it's more likely they're going to have more disposable income. Companies are having to pay more salaries, so prices are more likely to rise. We're more likely to see inflation. So this has been good, strong weekly earnings. So in normal circumstances, this would be positive for the pound. However, today, the pound has sold off heavily. Now, looking into the detail, we can see that the prior 3.1% was revised up, so 3.2%. The average weekly earnings, 3.6% versus 3.5%, and that's excluding bonuses. Employment change is down, so there's less people in employment, so that's negative for the pound. And the claimant count rate is 3.2%, prior 3.1%. So less people are claiming jobless claims, so that's good for the pound. So taking the data point as a whole, it's very strong for the pound. But part of the problem is there's two things. There's a good lesson to learn here. And first, let's just go to the pound chart and we'll see this. Let's see the pound. We'll go to the pound US dollar. There we go. So this was a data release, wasn't it? It was around, where are we now? We're now at around 1.2. The data release was around here, okay? And the market consolidated prior to the data, and then it sold off very heavily after the data. And it sold off heavily, and it's now moving and testing into these, it's breaking through the daily resistance level here as well at 1.24, sort of 1.2450 region is being broken as I speak now. So the learning point is this, is if something can't rally on good news, then lower prices are ahead, okay? And, it's a good market maxim, is that when something good comes for the currency, but it still can't make it rally, then lower prices are coming. Because, many traders were waiting for that data, because if that labor data came out poorly, it would really indicate that things are looking very bad for the pound. If there's anything that could be linked to Britain leaving Brexit affecting the UK economy, that would have led to lower pounds. But even a better result has led to the lower pounds. Now, it's worth being aware that some of the further details of this weekly earnings, some of the reasons that people are being paid more is because some industries in the UK are suffering a skill shortage, and particularly in the hospitality sector. Now, a lot of the hospitality sector in the UK has had European people involved in that sector. So with many Europeans thinking, well, I don't want to remain in Britain because I'm not sure what my status will be when Britain leaves the European Union. I'm going to leave now rather than wait to see what happens. A lot of those jobs have been emptied, and employers are having to offer higher wages to attract staff into those key areas. So some of the weekly earnings is in part due to Brexit. Now, it's not entirely the case, because some of the weekly earnings are for other reasons, but it's just being aware of that, that kind of detail. And it's not totally surprising that the pound is selling off. But again, it's a good reminder for the pound that until Brexit is sorted, the pound is remaining a sell the rallies currency. So when there's a rally in the pound, it's the most logical thing to do at the moment is to sell that rally until or unless there's some kind of Brexit resolution. Okay, but it's just a good point to see that. Now, Deutsche Bank, they are seeing now the chance of a hard Brexit at around 50%. Now, as I've been explaining to you, that's not really that surprising now. They think that the pound can go much lower, and the Deutsche Bank have raised the probability for a no-deal Brexit to 45%. The chances of a no-deal Brexit are increasing all the time. So the more Boris Johnson is in charge, the greater probability that there'll be a no-deal Brexit. However, one caveat to be aware of is if Boris Johnson is the UK Prime Minister, it's not a dead certainty that there will be a no-deal Brexit, because if Boris Johnson can't get enough support from Parliament to decide the Brexit approach, then there could be either a general election or a second referendum. So be aware of that, and they would most likely be pound positive. So this isn't a straightforward, Britain's only going to crash out of the European Union without a deal. There are other options which will have a different impact on the pound. That's why you have to be aware of that dynamic. Now, Deutsche Bank have an interesting trade. They're seeing pound yen short as an excellent expression of the political risk that is skewed asymmetrically downwards. So they're seeing more pound weakness and they're seeing yen strength, and that makes sense with that call with the potential for the US-China trade war to flare up. There could easily be some extra yen strength coming into the currency, and even Brexit negotiations themselves are risky, and so they are resulting in yen strength. I'm just looking here now at the weekly chart, and you can see in the last 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. So out of the last 11 weeks, 8 of them have been selling. Okay, and we're now settling down to that weekly pivot support level. Okay, we rejected the 100 moving averages, and we're down here at support. So just to be aware of that dynamic that's going on. Now, out of the European Central Bank, the ECB's Villeroy says that monetary policy cannot perform miracles. Now, this is the ECB member speaking. He's, saying some things that the monetary policy cannot do everything, cannot repair protectionist damage, also cannot replace reforms or fiscal policy. Monetary policy is guided by central bank mandate, not targeting exchange rate, and says that the ECB is data dependent, not market dependent. There has been some weakness for the euro this morning, and there was some weak German ZEW data that came out, and the Eurozone as a whole is struggling with a potential slowdown that's coming out of Germany and affecting all of the Eurozone, okay? So the ECB is primed to act. Now, they will be meeting shortly. They will be meeting this month, and the market will be looking very carefully to see does the ECB cut interest rates? Does it increase its quantitative easing program? How does it go about working on, that situation? So euro is a negative currency in the short to medium term at the moment, partly based on this negative euro sentiment. There is some euro risks today. We have a vote for the European Commission. Oh, Nadir, hang on, Nadir's lost audio. I hope everything's okay. Okay. I hope everyone else can hear me okay. If you're having trouble hearing me, please let me know. Just one attendee has just lost audio, so hope that's just Nadir, and I hope it gets sorted out quickly. Okay, I just saw that on the question panel. Yeah, euro risk for today. Something to be aware of. Could come sort of later on this evening, my time, 6 o'clock GMT. There is a vote for European Commission presidency. Now, von der Leyen, she needs to secure an absolute majority of 374 out of 747 votes to be confirmed as European Commission president. Okay. Now, she does look like, with her party supporters, to have around a 400 majority. Okay. But just to be aware that the ballot is secret, and so a secret ballot is more likely to throw up a surprise result, because obviously, no one knows who voted. So just to be aware of that voting begins at 4 o'clock, and at 6 o'clock the result is expected to be announced. Okay, so just to be wary that result could come in a bit later or earlier than scheduled. And so any euro positions, you want to be very wary of those going into this risk event, because there's opportunity for upset. Now, I showed you that Donald Trump tweet from yesterday. Well, today China in the European session responded to it, and China's foreign ministry said that it's misleading to suggest that it needs a trade deal with the US. And China is saying that they could resort to strong stimulus policies if they needed to, but they view the economy remaining steady for now. They're not in panic mode, is what they're saying, and then they're trying to communicate that they're not desperate for a deal. Already, you can see the kind of tension that's constantly brewing between the US and China. As I say, they are in a kind of truce. It's not an official truce. All that happened is US have said that they're not going to put extra tariffs on China. So it's a kind of an uneasy standoff, is the way I put it. More like a ceasefire. No one's firing at the moment, but the war's not over. No agreements have been made. It's just an uneasy standoff. So be aware that could flare up at any minute. Now, I'm conscious that as I go through the different sentiments each time, it can seem at first very impenetrable. Thinking, well, how do I get all this knowledge? How do I find this out on a day-to-day basis? Well, I just want to give you a quick, take a screenshot of this, guys, if you want. I've just put some free resources that you can use to work out sentiment by yourself. The whole idea of this workshop is that you guys begin to put into place some of these skills for yourself, okay? Here are websites with free resources to work through that will give you very helpful news, insight, and analysis, helping you to find your strong and your weak currency. You remember, for each session, or for a longer session, if it's a swing trade, you're wanting to find a strong currency, you want to trade it against a weak currency. I work with forexlive.com on a daily basis, and they are excellent. I'll just show you one resource that is very, very good. I'll just call it up here, and here you go. Okay, the good thing about Forex Live is this. They have something here called the trading session wraps. So when you go on the website, if you go to the trading session wraps, you can go to each wrap. Here's the European session. Here's the Asian session. Here's the US session. And you can read a brief summary. Okay, and you can look at some of the most important things that happened during the session. Okay, you also will get some good analysis. So Justin is an excellent analyst, and he writes opinion pieces as well. So where do we stand now on the Brexit equation? And he gives some analysis and some helpful infographic to show you what to do. So this is a free resource you can use. You see, you don't have to spend a lot of money to start understanding some key analysis, and some analysis is very obvious, so it's reported widely, and so that means it's accessible and easy to use. So the bigger data points, inflation data, GDP data, interest rate decisions, all these are very widely covered, and it's quite easy to see when there's a change from expectations. These are just free resources for you guys. Okay, so we've looked back. We've started to see which strong currencies, which weak currencies. Now I want to look forward, okay? And looking forward, we always want to pay attention when central bankers are speaking. That's because a central banker speaking can sometimes give a sneaky clue as to the future direction of the bank. So, a central banker might indicate whether they're more or less likely to raise or cut interest rates. This is whenever, I'm talking on the week ahead, FX week ahead that we do on Monday. I always say that when you see a rate statement, often the central banker will be speaking after the event. So that's why you always want to pay attention to what the central banker says after the event, because sometimes the central banker might consider that the market wrongly focused on a sentence in the rate statement, and they might want to correct it. So today, we've got two central bankers speaking, Mark Carney speaking, and Fed's Jerome Powell speaking. Okay, so Mark Carney, he might he reference wages? Not sure. Might he reference a Brexit? Again, the Mark Carney will almost certainly be reiterating Brexit concerns. That's almost certain. 5 o'clock GMT time, we have Powell speaking, and we're approaching the time when the blackout period, which is the time when the Federal Reserve doesn't communicate with the market anything about interest rate rises or cuts. Okay, so we're reaching that blackout period and we just don't hear from the Fed. So this is one of the last opportunities we have, and we have a number of Federal Reserve speakers today. So we've got Bostic. He's in a panel in Georgia. He will moderate a panel discussion on monetary policy and the economy and deliver closing remarks at around 2:05 GMT. We got Robert Kaplan speaking at lunch at the NABE Economic Measurement. The topic of the discussion will be assessment of economic conditions and implications for monetary policy. We've also got Jerome Powell speaking in Paris at 5 o'clock GMT time, as well as Chicago Fed President Evans speaking at CNBC Works Series event, where we will take questions and answers with the media after. So there's a lot of Fed speakers happening today. So oftentimes central bank speakers will coordinate a message, and we know at the moment that Jerome Powell was slightly more bearish than the market was expecting. Going into his statement last week, there was about a 5% or a 10% chance of a 50 basis points rate cut at the end of July. That's now risen up to just under 30%. So there's more probability of a larger rate cut than the market was expecting. So obviously that dialogue is going to be looked at very carefully. And if Jerome Powell indicates that higher a rate cut is happening, then we're going to see some more US dollar weakness, and that will be a surprise for the market. So that's one thing to look out for. Okay. We also want to look forward now to tomorrow, and one of the key events to look at is, and this is a potential trade setup I want to go through with you guys here. Now, tomorrow we've got the Canadian inflation data. Okay, it's expected to come in at minus 0.3%. Now, the Bank of Canada is in an unusual situation, and the unusual situation about the Bank of Canada is that it's a neutral central bank. In other words, it's thinking of neither rising nor cutting interest rates. Now, that's unusual because the Federal Reserve, they're looking at cutting interest rates. The European Central Bank is looking at cutting interest rates. The Reserve Bank of Australia, the Reserve Bank of New Zealand, Britain, the UK is awash with Brexit and not really knowing what to do next. But amongst some of the world's biggest central banks, Canada has been doing quite well, has been supported, had some good data, some good growth, and the CPI data will be eyed very carefully tomorrow. If you see some strong CPI data, that could be a catalyst for further Canadian dollar strength. Now, the currency pair which I find most interesting to trade against the Canadian dollar is the US dollar. Obviously, the US dollar sold off a little last week, with the potential to be selling off more depending on the data that comes out during this week. But if you look at the spread between the 2-year US Canadian bond yield, which is the blue line, okay, that's the difference in the spread. You can see that the yield spread tends to match the US dollar CAD exchange rate. So as the yield spread rises, the US dollar CAD exchange rate rises. As the yield spread falls, you see US dollar Canadian dollar falls. Okay, that's the general pattern. Now, at the moment, we can see that the yield spread has fell hard and fast, but the US dollar Canadian dollar pair has not caught up with it yet. Okay, so there is potential to short the US dollar Canadian dollar currency pair if that CPI data comes out poorly. Okay, so if it comes out well, if we get good CPI data, we're likely to see more US dollar Canadian dollar downside because the Canadian dollar is bought, which is US dollar Canadian dollar weakness. So that's a trade to look at. Let's quickly look at a chart. We'll look at the US dollar Canadian dollar chart. We'll just, right. Okay, so you can see that technically the US dollar Canadian dollar pair is rejecting that 100 exponential moving average. It also corresponds to this resistance level at 1.3050 region, and price is just consolidating now underneath it. Now, if we get some really weak or really strong Canadian CPI data, there could be a strong sell-off on the US dollar Canadian dollar pair. Okay, so as you can see from the weekly chart there's potential to drop down heading into this next support level and the 200 exponential moving average. So there's definite potential to move down there, and the potential catalyst for this will be the CPI data. So come Wednesday, come tomorrow, I'm going to be looking to see what that CPI data comes out. So if we get a CPI data that's 0.3, 0.4%, something that's strongly bullish for the Canadian dollar, then it will be possible to, this is what I'm looking to do. I'm looking to join that spike down and to trade the initial spike down. Okay, so that would just be something that would be very quick, short, sharp US dollar Canadian dollar move, spike down, trade that, and then potentially look for a retracement entry. And if we were looking for a retracement entry, let's just see. We'll just look at it different technically here. We'll just put the pivot points on the chart to look for some pivot point standard. That's it. Okay, so there we go. Now, so we look at this. If we saw some further weakness, I'd be looking at this one down leg there. Okay, so I would be looking at putting a fib retracement down there. Let's just take the pivot points off for a second. And I'll be looking at a retracement level. You see, a key level here would be here for me. This level here, the 618 level, there's some good resistance. That would be a good place to enter short. And there's another level down here at the 50%. Okay, so that kind of zone here, that 50 zone, 61.8 level will be good, as well as you can see that pivot point there. So that for me would be a good potential entry just underneath that pivot point, 1.320. Okay, so if we do get a strong CPI data, that would be where I would be looking to enter a US dollar Canadian dollar short. I might trade the spike down. So going down to like a 15-minute chart, I might trade the spike very quickly on a strong CPI deviation. But then I wouldn't be holding it for very long. I would be then taking my profit and running. But then looking to re-enter higher up around that pivot point, the 1.320. That would be my entry choice. And I'll be placing my stops above the R1 level, above here, so about 1.34 400, above the 1.3400 level. So we're looking at about 200 point stop. That is what I would be looking at should that happen. Let's try and put that. So I'll just put that tab back in there. Pop that away there. The other interesting trade that's coming up this week is the Australian dollar. Now, we know the Reserve Bank of Australia is focusing very heavily on employment data. They want their unemployment rate to be pushed down to 4.5%. Look, the forecast is 5.2%. So the chance, if there is a miss in the Australian dollar employment, that's going to weigh on the Australian dollar as the voices calling for another rate cut are going to get louder. So key data point coming out Thursday, 2:30 a.m. GMT time. Again, look for weakness here. This is an opportunity. If you get a weak reading, it's an opportunity to trade the spike down. If you get a weak reading, you trade the spike down, you've taken your profit, then you can look to enter on a retrace as well. So there's two opportunities that we potentially have. But these two opportunities for the Canadian CPI and the Australian labour data depends on the outcome. Okay, so that's just something to watch, and that's what we need to do going forward. Okay, so European session, quite a subdued session. Really, the market, apart from the pound has been the big mover. The market at the moment is really in a wait and see mode. Waiting for the Federal Reserve meeting, waiting for the ECB. The market's really seeking a new driver, okay, and slightly uncertain. Sammy, why is the US dollar relatively strong this week? There's been some stronger US retail sales have come out. So there's a little bit of US dollar strength on the back of that. But you know the old saying, one swallow doesn't make a summer. It's the same holds true for the US dollar at the moment. The question will be is how do the data points collectively come out this week, and how does that affect the Federal Reserve's outlook for rate cuts? So that's what the market's trying to weigh in. There's a little bit of noise, a little bit of moving around, but we're really waiting for some clear direction to get a clear conviction for any kind of a trade at the moment. We saw some, an indifferent start to the European session. S&P 500 futures were around unchanged. We had the FTSE 100 was up. We had, a mix in the European equity markets, some up, some down, some unchanged. 10-year yields slightly up. A lot of European bonds were falling. A lot of yields are falling there. And just in case you're struggling with these intermarket correlations, I wanted to just add this here for you. And the thing here is that a lot of intermarket correlations, they react to each other. So here, like if you have stocks rallying, you have a lower volatility index, then you'll see commodities rising, bond prices falling, which will be bond yields rising. That's risk on in FX trades. So that's risk on, selling yen, selling Swiss franc, buying Australian dollar, buying New Zealand dollar. Okay, if you've got a higher volatility index, you've got stocks falling, commodities falling, you've got bond prices rising, bond yields falling, then that's risk off. So you see yen strength, Japanese yen strength, Swiss franc strength, then you'll see Australian dollar and New Zealand dollar weakness. Okay, so that's just a little summary. Take a screenshot of that. It's helpful to have, especially if you're trying to work out what's happening when you come into your screens. Again, take a screenshot of that if you want a quick reminder of risk on markets. And then a quick reminder of risk off markets, okay? So now as we come to look at the charts, when we've done that work, yeah, Tribuvan, good point. If oil is weak, then why is the Canadian dollar going up? Is to be aware with the US dollar Canadian dollar pair, there's a 96% correlation with the Canadian dollar. So whenever oil goes up, you'll see US Canadian dollar go down and vice versa because of the strong correlation. At the moment, the thing to be looking at with the Canadian dollar is be focusing, Chibivan, on that CPI data out tomorrow. That's going to be the big driver for CAD. At the moment, sometimes you will get a divergence between the two, but it's not for very long. Okay, the divergence often corrects itself because Canada exports so much oil, and because so much oil of that goes to the US, it's a very oil sensitive economy. So they, it will come back in line. Sometimes you'll see it out of sync for a little bit, but generally those anomalies will correct themselves. But whenever you're trading CAD, you always got to have an eye on oil. So that's something to be aware of. And we've got the API data out tonight, and then we've got inventory data out tomorrow. And there's some hurricane going on in the Gulf at the moment, so just be aware of that impact on oil prices. Yeah, Chip, thanks for bringing that up. I appreciate that. It's good. Okay, now we're looking at the charts. We're looking at a weak currency, and we're seeing that the pound is our weak currency for the next coming session. Okay, it's just a catalogue of bad Brexit news. There's inability to rally on the good data. The pound is the weak currency for the moment. Strong currencies, we're seeing some strength in the New Zealand dollar on the back of the CPI data out last night, and we're seeing some strength in the yen in a slight risk aversion scenario. Okay, so if we wanted to look at that pair, we could look at I did put CAD in here initially, but I'm going to take CAD off for exactly the reason that Chibivan's talking about with the oil prices and the fact we've got the CPI data out tomorrow. So I'm just going to knock that off. The potential pairs that I've been looking at for today will be the pound New Zealand dollar or the pound Japanese yen pair. I think it's worth us, we've looked a little bit at the pound yen pair, so it may be worth us looking at the pound New Zealand pair now. Okay, so let's have a look. Pound New Zealand. I'll just get that up on my other chart. Okay, so here's the pound New Zealand pair. You can see that it's it's been heavily sold off today. Right now, this will also form the intraday process for trading. You see, once you've done your hard work, now, and you've identified your strong and your weak currency, okay? And you can see, okay, the pound New Zealand pair, that looks like a strong currency against the weak currency. The weak currency is the pound, and the stronger currency is in New Zealand dollar. So you can see from left to right, the chart has just been sold off over the the last couple of days. Okay, so it's a good currency to potentially trade. We see that strong selling pressure that's coming in. So the first thing we want to do is just check where are we in the charts. Is there any key overhead resistance, or are we going into key support levels? And although there's some support there, so we've broken through a key support level. That's worth marking in. Okay, so we're marking in a key support level there. Let's see if we can get that a little bit thicker and a little bit brighter. There we go. So we just broken through that key support level. Okay. Now intraday trading, I like to use the 15-minute chart. Okay. So use the 15-minute chart, and then what I want to do is intraday is in this kind of scenario for just an intraday trade. This is trade just for today. I'd be looking at trading with my stops above the previous day's high, because that would tell me I'm completely wrong if price goes to that level. So I'll go for that. Yesterday, 15th of July, it was the high from 15th of July. There it is. That's the high from 15th of July is up there. I'll draw the fib retracement level down to the lows today. Okay. So now what I'm looking for is key levels where you get a multiple number, we get a confluence of different support and resistance levels. So we've already drawn that key daily support level in there, 1.8590. I'm going to see, look, that is also the 0.382 Fibonacci retracement level from yesterday, and it's the 1.8600 level as well. So that region is quite an attractive region for potentially shorting. So I would instantly look at that region here, that 1.8600 region, as a potential area to short. Okay, so looking at it, I'm drawing my Fibonacci retracement level. Because it's just an intraday trade, I'm not wanting to hold this for a long time. This would be just hold for the next session. So I would place my entry here, stop above the high, and I'll be playing down to see how far I can go. Now, obviously, that's a dynamic event depending on how the market plays out. Okay, but worst case scenario, you'd be just looking at taking your profit down here. Or you're ideally going for an average daily range of about 40 to 60% of the average daily range of that pair. So all you do with this currency pair, you just get your average daily range indicator, which I've got here on the other chart. Let's see, we'll go to the pound New Zealand dollar. And we'll pop in template. And we'll insert indicator, and we'll put the average true range. And we can just see that on the daily chart, the average daily range is just 105 points. So on a, say we're taking 50% of that, it would be around 50 points. So you work out somewhere between 40 to 60 points is what you're looking at. Okay, so that would give you a good profit target. And so here, say you entered at 1.8600, you'd be looking at taking profit here about 1.8550 or 1.8540. That would be a reasonable chunk to take. But that's the process. Intraday trading, use the 15-minute chart. Say, for example, you want to hold this a bit longer. Let's take the pound yen chart. Okay, and say for example, it's not letting me do it. Hang on, let me. I'll show you on a different screen. Okay, say we'll look at the pound yen. Now, on the pound yen, let's look at the 1 hour chart. Okay, let's just take off the pivot points. Okay, and you say here, say you're looking for a longer term swing trade. Okay, in that case, what you might want to, if you're looking for a swing trade, then all you do is you might think, well, where you want to put your stop where you're definitely wrong. Okay, could price return up to there and still sell off? Yes. Could price return up to this level and still sell off? Yes. Where would you be definitely wrong? Well, you're definitely wrong above this high here. Okay, so you draw your Fibonacci retracement level from here. So you can then anchor your stop right above those highs. Okay. Oh, it's not that. Hang on. I'll just leave it slightly. I'll just leave it slightly shy. That'll help me. Okay. Oh. Right. Third time lucky, as they say. For some unknown reason, it's not letting me draw my Fib retracement level. Okay, let's just say for the sake of you imagine you draw your Fib retracement from the top there down to the bottom. Okay, then you're looking for places where you get confluence of support and resistance, and you can see here, look, that level here around the 136, the 135.50 level. You can see here supports there, 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 there. Okay, that'd be a key level. Again, here, that would be a key level here. Okay, so you're looking, if this was a longer term trade, you know, it would make sense to have a longer term trade. The pound is being sold off. You've got a potential Japanese yen strength and a number of risk events that are taking place. Then this region here, this 135 to 135.40, 50 region would be a good place to short, and stops just placed above your high 136.30. And then this is something you'd be looking for trading a little bit longer. So you could maybe go down to your weekly chart and start to look for a weekly target on a pivot point or some other rational place. But you just do the same process, but you just do it in a slightly different way. Okay. Again, looking at risk, I've covered that before. Daily technical process, we've looked at that. Coming to the end of our session, we're looking at now is if you want some training with HYCM, I personally do provide that training. HYCM have this offer that if you deposit the following amounts into your trading account, you get the following benefits from here. If that's something you're interested in, just take a screenshot of that. But I just want to point out that this isn't money you pay. This is money that is yours that you deposit, and then you get access to have coaching with me on a one-to-one basis. So if that's something you think you find helpful or like to look at, that's something just to take a screenshot of for you to consider. Great. Next Monday, I will be here at 12:30 GMT looking at the key market events ahead. Don't forget, before I go, look at the CAD CPI data out on Wednesday. Then the Australian employment data out on Thursday. They're key potential market moving events. So keep on top of that and keep on with those. Okay, guys, thank you very much for attending. I hope that you have a really good week. I hope you have a successful trading week, and I look forward to seeing you shortly. Oh yeah, Aaron, thank you. I did have a great holiday. It's great. I should have mentioned it as back. I had 2 weeks in Wales. Which is a beautiful part of the world, and I enjoyed exploring the mountains and spending time on the beaches with my family. So if you ever get a chance to go to Wales, do go and go along to it. Yeah, thanks, Trivivan. Thanks, guys. Have a great week. Speak to you soon. Bye.